The week before Christmas 2025 brought a rare calm to the UK stock market as the usual hustle and bustle faded into a gentle quiet. London's financial district slowed down noticeably, with traders and analysts shifting their focus from the trading floors to holiday festivities and family gatherings. With most investors away or winding down for the year, the market moved gently, reflecting the typical holiday lull that often characterizes this time of year. The FTSE 100, which tracks the UK's largest and most influential companies, saw only minor changes, nudging up slightly, and continuing a positive trend that had been building over previous weeks. This stability reassured investors, signaling a confident and steady end to the year, with few surprises or sudden shifts. The FTSE 250, a key measure of the UK's domestic economy and mid-sized companies, also posted a small but meaningful gain. Both indexes drifted upward, driven more by company-specific news and year-end updates than by any broad market moves or global events. The market coasted into the holiday break, offering investors and professionals a rare moment of reflection after a busy and sometimes turbulent year. Investors could look back on strong performance and steady growth without the stress of last-minute drama or unexpected volatility. The mood was one of quiet satisfaction, not excitement, as people prepared to enjoy the festive season. This peaceful state allowed everyone to step away, confident in the market's health and the prospects for the coming year. The lack of major activity was a gift in itself, providing a welcome break from the usual pace. The market's gentle rhythm set a reassuring tone for the holidays, allowing both professionals and investors to relax. It was a time for stability, not surprises, and for many, that was exactly what was needed. As the year closed, the market's calm was a welcome pause before the new year, promising a fresh start and new opportunities ahead. The holiday schedule was the main reason for the market's subdued activity, but there were other factors at play as well. With Christmas and Boxing Day falling back-to-back, the London Stock Exchange closed early, leaving just 2.5 trading days. This compressed schedule meant that there was little time for meaningful trades or major announcements. Most major investors had already wrapped up for the year, avoiding big moves before the break. Many fund managers and institutional traders were already on vacation, leaving only a skeleton crew behind. This led to thin trading, fewer shares changing hands and less market noise. The usual buzz of activity was replaced by a calm, almost eerie quiet. With so many professionals on leave, even small trades could move prices. But volatility remained low. The lack of big players meant that markets drifted rather than surged. The market's quiet was predictable, as corporate news slowed and big players stepped away. There were few earnings reports or economic updates to spark interest. The few traders still active made only minor adjustments, mostly tweaking positions or managing risk rather than making bold bets. The general feeling was one of winding down, not gearing up. Offices emptied out as people looked forward to time with family and friends. This natural slowdown lets the financial system reset before the new year. It's a pause that helps everyone recharge and prepare for what's ahead. For investors, it's a chance to review portfolios without daily distractions, reflect on the year's performance, and plan for the future. The thin trading signaled that the year's main business was done and that the market was ready for a fresh start. The market was taking a well-deserved rest, pausing after months of constant activity and decision-making. It set a peaceful tone for the festive season, allowing everyone in finance to enjoy a rare moment of calm before the new year begins. During the quiet holiday week, the UK's main stock indexes made small but positive moves, reflecting a sense of stability in the market despite the seasonal slowdown. The FTSE 100 ended Tuesday up 0.3%, continuing its upward trend and showing resilience even as trading volumes dipped. The FTSE 250, which tracks medium-sized UK companies, rose by 0.1%, highlighting steady confidence in the broader UK economy. These modest gains reflected underlying market optimism, even with many traders away and offices running on skeleton crews. The FTSE 250's rise suggested UK-focused businesses were on solid ground, with investors encouraged by their performance. The gains weren't driven by dramatic events, but by a collection of positive stories across sectors, from retail to finance. In thin trading, a few large companies can sway the entire index, making each move more noticeable than usual. The market was gently nudged forward by pockets of good news, such as upbeat earnings reports and encouraging economic data. These small steps upward were a fitting end to the trading year, capping off a period of cautious optimism. Investors saw a reassuring signal. The market was closing on a high note, providing a sense of comfort heading into the new year. The calm, confident mood set the stage for the holidays, leaving many hopeful for continued progress when trading resumes. The mining sector powered the FTSE 100's gains, thanks to a surge in copper prices. Copper hit a record high, topping $12,000 per ton, a sign of strong global demand. Mining giants like Antofagasta and Rio Tinto saw their shares climb, directly benefiting from higher copper prices. Anglo American jumped 2.6%, boosted by both copper's rise and a positive analyst rating from Wells Fargo. Such endorsements can spark extra investor interest. The mining sector's strength was a key driver for the FTSE 100 during the quiet week. As some of the largest companies in the index, their gains had an outsized impact. The sector's success showed how global trends can shape the UK market. For investors, it was a welcome Christmas bonus. The mining rally kept the market in positive territory. Banks and healthcare stocks also supported the FTSE 100's gentle climb. Major lenders like HSBC and Barclays posted modest gains, reflecting economic optimism and a recent interest rate cut. Lower rates made lending more attractive, boosting bank shares. The healthcare sector rose 0.4%, buoyed by positive news from Europe. Novo Nordisk's new weight loss pill approval in the US. Good news for one big healthcare firm often lifts the whole sector. UK healthcare stocks benefited from this ripple effect. The sector's stability and growth potential made it a safe bet for investors. Together, mining, banking, and healthcare gains provided solid support for the market. These sectors' performance helped the FTSE 100 end the week on a confident note. The market's strength was broad-based, not reliant on a single industry. Not every FTSE 100 company joined the festive rally. Diageo, the drinks giant, saw its shares drop 1.8% for a second straight day, reflecting investor nerves. Sometimes, company-specific news or industry trends can weigh on stocks, even in a positive market. Compass Group, a major food service provider, also slipped 1.2%, possibly due to concerns about changing workplace habits. These declines reminded investors that the market is always a mix of winners and losers. Even in a calm week, some companies face unique challenges. The drops in Diageo and Compass Group balanced out gains elsewhere. Investors continued to make careful decisions, shifting money to stronger prospects. This constant reevaluation keeps the market dynamic. The overall picture remains stable, despite a few setbacks. The Bank of England's recent interest rate cut was a major boost for the market. By lowering rates, the central bank made borrowing cheaper, encouraging spending and investment. The move signaled that inflation was under control and growth was the new focus. Investor confidence surged, helping lift the FTSE 100 and FTSE 250. Companies with high debt or those selling big-ticket items benefited most. The rate cut created a favorable environment for a wide range of businesses. It underpinned the market's calm and optimism heading into the holidays. The decision reassured investors that authorities were ready to support the economy. This foundation of confidence helped the market close the year on a high note. Looking beyond Christmas week, 2025 was a standout year for UK stocks. The FTSE 100 gained 16%, a strong return for investors. Mining, financials, and defense sectors drove much of this growth. Defense companies thrived amid ongoing global tensions. The market's success was broad-based, not reliant on a single sector. UK stocks kept pace with Europe's StoXX 600 and the US S&P 500, both also up 16%. This performance showed the UK was an attractive destination for global investors. After years of lagging, UK stocks proved their resilience and competitiveness. The FTSE 100's gains put it on equal footing with major global markets. 2025 was a year of renewed confidence and strong returns for UK investors. The final trading week of 2025 perfectly reflected the year: calm, confident, and positive. The market drifted gently upward with no shocks or surprises. Gains in mining, banking, and healthcare set the tone, while a few declines balanced the picture. The Bank of England's rate cut reassured investors and supported the market's stability. The FTSE 100's 16% annual gain matched global peers, proving UK stocks' strength. Investors could enjoy the holidays without worry. The market closed its books on a high note, which were I den neerkusten boren. Ayekshir were genoi abachastengen miap indejaction for luffer nipper morisher mar. The peaceful finish was the best possible Christmas gift for investors. It was a fitting end to a year of impressive growth and renewed optimism.